After a rough winter or rough December, actually, in Germany for Tesla, Tesla has dropped prices and the stock is under pressure this morning, though holding around 214, which was the low yesterday. We'll see what happens as things unfold this morning. So the Wall Street Journal says it this way. In Germany, the U.S. electric car company slashed prices by 5,000 euros, about $5,439, for two versions of its Model Y. The performance model now costs the German consumer 55,990 euros, while the long-range model costs 49,990, be slightly higher in dollars. Tesla also cut the base Model Y price by 1,900 euros to 42,990. Well, Tesla sales rose 2.2% in Germany over all of last year, but fell 77% in December, according to the Federal Motor Transport Authority, whose name is unpronounceable. Reuters goes on to say that in France, Tesla lowered prices on Model Y cars by as much as 6.7%, while in the Netherlands, Tesla reduced prices for the Model Y by up to 7.7%. In Norway, slashed prices between 5.6 and 7.1%. Meanwhile, the battery company, CATL, is cutting prices on its batteries, forcing its competition to do the same. And I'm going to have a comprehensive look at this story later in the morning with Brian Wong. This subject is really science heavy, and so I wanted to bring Brian in to help us understand it. You need your heavy hitters when you need your heavy hitters. This is Randy Kirk. Please if you like the commentary and the methodologies that we use in the mornings and all through the day in order to bring you the financial picture. Look, what we're trying to do here, I want to explain this again for those who are new, is we try to combine everything. We look at the very biggest news of the day all day long with regard to Tesla. We're not looking at whether they changed, a tire cover. We want to know what's happening that's going to really impact the stock. We look at Tesla as a company, the entire fundamentals, every single division in detail, because there's a lot of divisions right now that are eventually going to be bigger than the car division. And we look at the overall economy and its impact on Tesla as well as on Tesla stock. And we look at, of course, the stock market, the macro. How is that impacting Tesla? You'll see all of that this morning, as usual, as we unwrap all of what's going on. So hit like, hit subscribe, notify. Later this morning, we'll have that Brian Wong story. And then tonight, we'll have Jeff Lutz to really help us take a look at what the economic impacts are. What's the overall story going on here? And this will be, I think, an extremely good show tonight with Jeff Lutz. Rob Meyer has closed up shop. Many of you know Rob. He was certainly an inspiration to me. I started watching him years and years ago, and his desire, his big thing was he wanted to get in there. He did his podcast because he wanted to fight FUD. He wanted to fight disinformation. That's what I wanted to do when I wrote the books. I saw the FUD out there, and I wanted to fight the FUD. That was inspirational in getting me to do the channel. Hey, Rob did a great job. He created a podcast that was respected, and we're going to miss you, Rob. And we're really glad for what you've done for the community over the years. I know you're still going to be active in the community, even though you won't have your daily podcast. Well, unfortunately, I don't have a window into Tesla's super fast feedback from their showrooms and from their website. Therefore, we get an imperfect understanding of what they are seeing. The financial press puts it all down to lower demand for BEVs, but it's not actually lower demand. It's just that there's not enough new demand to take up all the new product that's coming on the market. Therefore, you have this $100 billion issue. So let's see if I can explain it a little differently. If Tesla only needed to sell 10% more cars next year to satisfy its stock base, if that was going to make the executives and the C-suite happy, if that's all they needed to do is sell 10% more cars next year, there'd be no question about how to do that. A little advertising, maybe you lower the price a little, whatever, but if that's what your goal was, I don't think Tesla would have any issue at all selling 10% more cars in this environment. They don't want to sell 10% more cars. They want to sell 50% more cars or 40% more cars. That is a massive number of new cars to bring into the market. Meanwhile, you've got all these other car manufacturers who are also either already in the BEV space or entering the BEV space or adding new product to that space. And all of them want to increase their sales by 50 or 100%, not by 10%. Then you have the ICE cars that are dying and they're desperate. And they're trying to figure out ways to sell more cars. So they're trying to lower prices or add more, better specs or whatever, as they would always do. But I've been under this kind of pressure competitively in my life many, many times. And so you're starting to get, there's a desperation. How do I keep some of my market share? So you have not less demand necessarily for a Tesla vehicle. What you have is a massive number of folks all going after that same total addressable market. So these price cuts would lead, that we've just seen, would also lend some credence to what I said the other day, that Tesla wasn't that unhappy to have an excuse to lay off folks for 2 weeks in Berlin. They're blaming it on supply issues arising out of the Red Sea supply chain problems. I'm thinking, yeah, those problems might exist, but they might have been correctable if there was massive demand right now in Europe. Of course, this is going to cause me and every other analyst to go back to the drawing board for 2024 expectations. For sure, I hope that Tesla is working hard on some new marketing approaches rather than just counting on lowering prices as their primary method to drive more demand. On the other hand, they've been closing in on sticker parity with ICE cars. If they can hit those numbers with some kind of decent margins, they might be able to improve costs enough to eventually get the margins back. In particular, as noted, battery prices are coming down big time, and those are going to come down even more apparently as CATL, which I misstated above. I knew when I was saying that I was wrong, but I couldn't remember the right name. As CATL and all the rest of the battery makers, and there's a lot of them now also competing for the same space. Well, those prices are coming down. Well, that's going to help Tesla to lower its prices while maintaining margins. So Elon has stated in the past that these price decreases are going to increase the total TAM. And there's no doubt that that's true. The person who can afford a $50,000 car, great, but then, you run out of those, and then you need to start talking to the folks that can afford a $45,000 car. And there's no doubt about that. But will this turn out to be the right strategy as opposed to trying to find more folks who can afford the $50,000 car? That is the big, big question. Well, like I said about the battery is the biggest cost of the car. It's coming down, and the rest of the car has been so simplified, so completely simplified, it would seem that there would be a tremendous advantage compared to ICE cars. And that's undoubtedly true. So that speaks to the idea that you can lower the prices and pick up more and more of the TAM. And then we have this. We have another poll asking the question, what barriers currently prevent you from purchasing an electric vehicle? And these are people that are considering an EV. And that number one at 63% was the cost is too high. And of course, we know that the costs have already come down, but we haven't advertised to folks enough to let them know how much the prices come down. They're completely wrong if they would ask the next question is, how much do you think it would cost you to get a Tesla Model Y? They're going to say 60 or 70,000. And of course, it's now down in the 40s for the entry level. And then the second issue would be limited access to convenient charging, which is not true of Teslas, but the folks don't get it. They haven't been advertised to. And then range mileage concerns is the next one. Again, we need more advertising to let folks know that this is just not a problem. Well, then in addition to everything else, we have to take into consideration the economies of Europe and China that are not doing well at all. China missed its numbers just a couple of days ago. I didn't mention that, but China missed its GDP numbers. So they're not doing well. The US, of course, is doing better, but Europe and China are suffering. And that is, of course, affecting car sales overall. Now we have this breaking from BDUD3R on X. He says 0% financing for all new Model Y orders and inventory orders for Model Y in Europe. So $250 a month SR. Sure, why not? He says $380 a month for the Model Y Performance. Here you go for the standard range. $250 a month, $380 a month for the Performance. So those are some pretty good between dropping the price and now offering zero interest rates. If they advertise, if folks know that these things are true, I have to believe they're going to get some significant sales in the first quarter. Now, how long will this last? That's another question. As things improve, as we get the first quarter is always the slowest month for auto sales everywhere. As we get into March, will we see price increases? Who knows? But it's obviously affecting the stock this morning, and it's going to affect thinking for a while. All right, as we get to the economic front in general, pretty much all asset classes except the dollar are falling this morning. Bond yields are up past 4 basis points, and that puts it at over the 4.1 level. And that's at least one factor that's driving the stock indices lower again. But then this good news is bad news story is being blamed for both, and CNBC reports it this way. Retail sales increased 6% for December, buoyed by a pickup in clothing and accessories, as well as online non-store and accessory stores. You know what? I'm sorry. I should have read this before because they make no sense. Anyway, the results were better than the 0.4% Dow Jones estimate. Excluding autos, sales rose 0.4%, which also topped the 0.2% estimate. The report comes amid speculation about how much strength the U.S. economy possessed heading into the new year when growth is expected to slow. However, a resilient consumer could signal more momentum and possibly give the Federal Reserve some caution about lowering interest rates, of course, where in March, where a large percentage still believes. I haven't looked to see what the percentage is this morning, still believing March will have a cut. On the year-over-year basis, retail sales ended the year up 5.6%. That number is not adjusted for inflation. So sales show that consumers are more than keeping up with the inflation rate of 3.4%. So in other words, you'll be seeing a real increase in sales of a little over 2%. The CPI increased 0.3% in December, as we know. Okay. Mortgage interest rates were up 10%. I'm sorry, mortgage interest. The interest in getting a mortgage increased 10% in the most recent reporting period. The lower interest rates are definitely having an impact. And then, as I've been saying over and over again, this means the housing market could have a really good year in the United States. And this could be the plus that could keep the economy from falling into recession. All right, with all that said, let's take a look at the numbers, starting with Truflation. Truflation is at 2.13. That is now 17 days in a row that it's around this number. 213, 217, right around this number. We'll learn a lot more about inflation when we get those PCE numbers the end of next week. Meanwhile, Tesla is down 2.27%. It is almost exactly 215. That is considered by some to be that kind of a floor, that if we break through 215 meaningfully for the day, that we could be going down to 200. Or we could bounce off it, because if this would be yesterday, we bounced off 215. Will we bounce off it again? Right now, the indication would be that it's not holding up really well. I think it was as low as 214 yesterday. 214, 215 seems to be that floor. We'll see what happens later today. But Tesla is by no means alone this morning. Everything is down. The NASDAQ is down 1.44%. So Tesla's not even down in its normal delta on the compared to the NASDAQ. The Dow Jones is down 0.3%. The S&P is down 0.77%, and 100% of all of the Magnificent Seven are down, and down in a similar way to Tesla, with NVIDIA down 2.29 and Microsoft down 1.21. I mean, Amazon down 1.8. They're all down significantly, as are all of the Cathie Woods except for Inseego. Now, I don't have all of the Kathy Woods, all the Kathy Woods that I follow, or that I keep in my little, you've got one of these, right? But look at all that red. All right, so let's take a look now. We know the bonds were not helping this morning. Let's go ahead and take a look where we are on that now. We have now got the 10-year up at 4.117. Jeff Lutz sent me a note yesterday saying that if we got into this 4.1, 4.2 area, that we could be looking at some real destruction. I think that this is, I'm not 100% sure I agree with you, Jeff. I think this is not going to hold. I think we're going to see that the bonds will be retreating again shortly. We have got the, everything else is up in the bonds. We've got the 5-year up almost 10 basis points. You've got the 3-year up 11.5. You've got the 2-year up 12.5. So that's kind of reversing yesterday when the 2-year was not as strong. So pretty much across the board, the yields are up except in the 1 month and the 2 month. So there you go. That is why the rest of the market is retreating. Let's take a look. I know I've already checked oil a little while ago. Oil was down big time. Oil is down $1.21 to 71.19. Brent similarly 76.90 at this point. Natural gas, wow, it's only down 2.83% this morning to 2.818. You've got gold actually starting to move down close to the 2,000. So now you're seeing gold with a fairly strong slide. Copper down 0.49%. You've got the dollar strong, and some of those commodities are down because the dollar is the strongest it's been over the last 30 days. And then you've got Bitcoin down another 462, but around 42.7. So that's not incredibly bad. All right, let's go back and take a look at Tesla again. And let's also look at what these things are in dollars, because I forgot to do that a minute ago. So we got the Dow down, in dollars are in points. The Dow Jones down 125, the NASDAQ down 218, S&P down 39, and Tesla down $5.30, still sitting at 214.34, a little worse than it was just a few minutes ago. Apple down 245, Google down 3. So you get my point. All right, so it's been a rough day. Why don't you treat yourself to a Tesla Cybertruck bottle opener and refrigerator magnet. Look at the size of that magnet. This is for those of you who haven't seen this before, this is a solid piece of stainless steel. It's a lot of fun. We've sold thousands of these, actually thousands of them in the 4 months roughly that we've been selling them. They're selling well on Amazon, on my Amazon site, as well as, of course, most of them have been sold to you all. $25 for one, $45 for two, $65 for three, etc. All that information is in the description below, as well as how to order it through PayPal, just paypal.me/Randy Kirk, all in lowercase letters. Please look below in the description to get the details so you get everything right, including letting me know if it's camo or stainless. Also, you want to join Patreon, please join Patreon at the $3 level, $5 or $10 level. And thank you for so many who have joined already in 2024. Later on today, we've got Brian Wong coming on. This is a really important program. You want to make sure that you see this, where Brian is going to help us understand exactly what's going on with the CATL price drops, as well as some of the other, almost all their competition are also, of course, having to drop their prices as well. This is going to have a huge impact on Tesla's margins and their ability to cut prices. Yesterday, we had a phenomenal time with Brian White, as Brian helped me to get an understanding of some of the rumors that are going around. I'll put a card up for that one right here. All right, that's it for now. We will see you several times later date. Jeff Lutz coming on as well tonight. You don't want to miss that one. So hit like, subscribe, and notify. It has been great talking to you this morning.